All right, everyone, and we're back for the article of the day. This one is going to be written by Tom DeChristopher, and there's going to be a link below so that you can read it yourself. This one goes pretty simply. The first question is why oil prices went from 4-year highs to a bear market in just 6 weeks. So oil has a lot to do with our economy because of consumption. If there's a lot of consumption, that means that it's a booming economy normally. So the price itself has dropped well over 20%. So oil is in a bear market. Remember, you hear that 20% mark, think bear market. So this goes over to show that it is 56.19. Okay, so it's $56.19 a barrel. Okay, so that's going to be WTI crude. There's another one called Brent crude, and there are a few different ways of determining this, but long story short, why did it fall? Let's get the answer there really quick. Why did it fall so quickly? Well, there have been plenty of people, forecasters, who said it never should have risen that high to begin with. But in short, the answer is speculation. The futures market was seeing a possible shortage of oil, seeing as the economy, at least it's been said to have been doing so good, and it has been, but it's been said to be doing so good, and they were actually expecting a shortage. That shortage would actually make for higher oil prices. Well, what we come to find out is that there's no shortage. There's actually a surplus, and then in that surplus, there goes the weakness. So those futures were canceled. A lot of shorts going on. People are canceling those futures. They were taking the money out of the futures market because they know the price is going to be going down, which made it tank even more. So that all started actually at the beginning of October, and October was a pretty bloody month, actually, when it came to the stock market. So over the past what was it? Over the past 6 weeks, we've seen a huge decline from its peak. For the price per barrel. So what we're seeing now is that also had something to do with the stock market, okay? Because they're kind of connected, okay? Obviously, when people are trying to find a safe haven for money, they all kind of intertwine. So recently, the U.S. dollar has been, and it actually shows in this article as well, the U.S. dollar has been beating other currencies, many different currencies, by about 3% lately, and at least within the past few months. That's actually a pretty big deal. Remember, the US dollar is the reserve currency. That is what most countries, that's definitely what America is trying to force, is that most countries are supposed to buy oil with the US dollar, okay? And with that strength, that comes more purchasing power, but come to find out, we've been producing too much. So Saudi Arabia has actually been trying to cut production so they can keep the price up. And Trump has a problem with that because he wants cheap oil. That cheap oil produces cheap gasoline. So normally when the price of the price of these barrels of oil go down, we, as the consumer, receive a little bit cheaper. We receive a little bit cheaper gasoline as the end result. So check it out. It's actually a very good read. It explains a lot in a pretty short period of time. So yeah, thank you for watching, and I'll be coming back to you soon with another article today. Thanks, guys. Once again, hit like if you've enjoyed this. Please subscribe, and don't forget to hit the notification bell so that anytime I do a live stream or anytime that I am going to post another video, you'll immediately see it. And as usual, thanks for watching, and we'll talk to you guys soon.